Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm here to help you make the most of your minerals and royalties. And Justin Williams is here with me today, as always. Hey, Justin.
Hey, Matt. Thanks for having me.
Thanks for coming on to represent the individual mineral owner. And today we're going to talk about news for August 2020. And we have some really interesting articles for this month. It was no shortage of news, right, Justin?
No, not at all. Not at all. The hard part was just finding the really good stories, and there's a few.
There are a few, and I'll just go ahead and dive into the first one. And we're going back to North Dakota this month. There's been a development in the Wilkinson family case. The article's title is North Dakota Supreme Court Rejects Challenge to Law Would Return Mineral Rights the State Had Claimed Under Lake Sakakawea. A North Dakota Supreme Court decision has given mineral rights owners in and around Lake Sakakawea hope for a similar decision in their case. Josh Swanson, an attorney representing the Wilkinson family, said he was pleased to see the reasoning the North Dakota Supreme Court used in its decision in Sorum v. State, which was announced Thursday, July 30th. In that case, several legislators and other residents sued the state, claiming a law that repudiated the state's claim to some of the mineral rights violated the state constitution. Swanson said part of the basis for the court's decision, the idea the state wasn't giving the mineral rights as a gift because it never owned the rights, was the same as his clients argue. That reasoning is what we've been arguing going back to 2014 when we took the case, Swanson told Williston Herald. In an opinion written by Justice Jared Tuft, the court reasons a section of the law where the state is required to return some money doesn't violate the state constitution's prohibition on gifts from the government. And we reported on this case in previous news episodes. In fact, I think it was maybe a month or two ago that we had an update with respect to that lawsuit that they were talking about that was brought up. And the Wilkinson family case has been going on, like the article mentioned, since 2014. The suit was originally dismissed, but then the state Supreme Court ordered the judge to reconsider the dismissal of the suit. And this judge subsequently ruled the Wilkinsons own the disputed minerals and are owed royalties. Both the state and Statoil have appealed that ruling, and a decision is expected soon, specifically on this case from the Supreme Court. Now, the governor, it was interesting, Justin, as to what the governor had to say. Do you want to talk about that?
Absolutely. So the governor, another defendant in the case, issued a statement praising the ruling. He said, today's Supreme Court opinion resolves a long-standing dispute over mineral ownership under Lake Sakakawea and provides certainty for the state, mineral owners, and the oil and gas industry, Burgum said. The state collected revenue from oil and gas leases where it later recognized it held no rights to the minerals. The remedy provided under Senate Bill 2134, affirmed by the Supreme Court, allows the state to right this wrong by returning funds to thousands of mineral owners that it never should have collected it in the first place. And to do so without violating the anti-gift clause in the North Dakota Constitution. We're grateful for the effort of the legislator to carefully draft this remedy, treat thousands of North Dakota mineral acres owners fairly, and bring this matter to a resolution. So that's great news. And when we spoke about this before, Matt, I think we kind of both agreed that the state really never should have had this.
Yeah, I think it was pretty clear based on the information and just in the articles that we've reported on that it was evidence indicated that the state didn't have claim to that. And so it's good to see that going back to the rightful owners. And I'm sure a lot of North Dakota mineral owners are going to be happy about this news. And I would assume that based on that ruling that the Wilkinson family will have a similar outcome, but we'll report back when we find out what happens there. And so do you want to just dive into the next one now?
Let's do it. So BP built its business on oil and gas. Now climate change is taking it apart. Oil giant aims for 40% output cut and tenfold increase in spending on low carbon energy. With climate change bearing down on the planet and the novel coronavirus upending the fossil fuel business, one of the world's biggest oil and gas companies on Tuesday mapped out how it plans to navigate the next decade by radically cutting back on its oil and gas business. The London-based BP said it will transform itself by halting oil and gas exploration in new countries, slashing oil and gas production by 40%, and lowering carbon emissions by about a third, while boosting capital spending on low carbon energy tenfold to 5 billion a year. This makes BP the first supermajor to spell out in detail what the energy transition will actually entail in practical terms, said Pavel Molchanov, senior energy analyst for the investment firm Raymond James. So this is interesting, man, and not a huge surprise, I guess, with the way that the market's looking right now. But oil prices change, who knows?
Yeah, it's not a big surprise. And I think it's consistent with the news that we've reported over the past few months. And in fact, in June, we talked about how renewable energy was poised to gain market share that had been historically held by fossil fuels. And I think the articles we talked about specifically talked about wind and solar. This particular article, which again, we had talked about BP in general, about trying to hit a net carbon zero goal by 2050 originally. And in this latest announcement, they gave some more details that indicate that they're going to make major changes to their business by 2030 in that shift towards more renewable. So it's maybe going to happen a little bit sooner. 10 years from now, it's a little bit of time yet, but they're still making moves, right now to go in that direction. And anecdotally, we have some minerals that are in North Texas, and they used to be operated by BP. They recently sold them, and so I imagine that is going to continue to occur. They're going to look at sort of non-core acreage, non-core assets, and start to divest, from that fossil fuel side to raise money. I would assume then to invest in more renewable projects. So, again, like you said, obviously, if the price of oil jumps a lot higher, it's going to be harder to justify that to shareholders. This is what I'll tell you what BP Chief Executive Officer Bernard Looney had to say. He said, "We believe our new strategy provides a comprehensive and coherent approach to turn our net zero ambition into action. This coming decade is critical for the world in the fight against climate change, and to drive the necessary change in global energy systems will require action from everyone." So they're definitely not waiting, and seems like they're making some big moves in that direction. And one of those moves, in fact, was slashing their dividend by more than 50%. So that 50% dividend cut to shareholders probably didn't sit really well, although the market seemed to react somewhat favorably, at least to this specific announcement the day it was announced. Haven't followed the stock since then to see if it has gone back down. There's a lot of other stuff in the world going on, but certainly that dividend cut is going to give them more cash to spend on climate change related expenses. So something you have to think about from a shareholder point of view: is it more of an altruistic investment in BP versus potentially looking at that dividend return, because that has dropped significantly at this point. So interesting news there, right?
Very interesting. All right, our next story here. Mineral rights owner Fortis Minerals withdraws an estimated 400 million IPO. Fortis Minerals LLC, an NCAP-backed owner of oil and gas mineral royalty interest in the southwestern United States, withdrew its plans for its initial public offering on Thursday. It originally filed in September of 2019 with an estimated deal size of 400 million. According to this article, the company was founded in 2016 and is based out of Houston. They reported 138 million in revenue for the 12 months, which ended in June 30, 2019. So again, not a huge surprise, but haven't heard a ton of these.
Yeah, this is one of the next, I guess, companies that was looking to take advantage of the price of oil, at least when it was above $50 a barrel at the end of 2019 and early 2020. And I know of other companies as well that had looked at going public that have shelved those plans, at least right now with the low commodity prices, because really it makes no sense to go public right now. They're not going to raise the money that they had originally intended to raise just because their valuation is going to be based on the current price of oil and natural gas versus, what it was 6, 12 months ago. So they'll probably wait and see what happens to the market. I wouldn't be surprised if they come back out if once oil prices do recover and try to dust off the IPO. There is definitely some appetite for investing in minerals and royalties still, at least from a publicly traded company standpoint. There's definitely a move away from the operators, like we've talked about before. And so I don't know if some of that money might be looking at going into minerals and royalties, just because they seem to be lower risk because of the lower cost structure, and you don't have to foot the bill for drilling the well unless they've got non-operated working interest as well. But something that we'll keep an eye on and see what happens in the market, but not a big surprise like you mentioned.
Absolutely. Timing is everything, and it seems like they were just a little bit too late.
Just missed it by that much, right? All right. Well, that wraps it up for this month's Mineral Rights News. As always, if you have enjoyed the content that we've been putting out there, ask a simple favor. If you could go on to Apple Podcasts or wherever you're listening to this, just click the rating. 5 stars would be great. If not, send me an email at feedback@mineralrightspodcast to let us know what we could do better. And yeah, leave us that rating and review. It definitely helps us get the word out about the show and to help us reach other mineral and royalty owners that need this information. So thanks again for listening, and thanks, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.